Welcome back. We are moving on to 12.3, preparing our payroll records. I need you on page 351 in the textbook. What we have on page 351 is something called a payroll register. And what this is a list of all of my employees for one pay period. Okay, so it's going to have all, in my case now I only have 6 of them. It'll have their marital status and allowances. It'll talk about their earnings, their deductions, what they actually take home. But again, all my people for one pay period. So we start out with the pay period date over here in the upper left, December 15th. That may or may not match up with the actual check date or the day we're writing out these payroll checks. In this case, it does match up, but what if our pay period date ends on, say, like a Sunday? Okay, your employer may not be in the office on a Sunday writing payroll checks. So that number over here may be December 13th. Your employer may make you wait until Monday and have it be December 16th. Okay, so don't get hung up if my pay period and my date of my payment do not match up. Next up, I have my employee's personal data. Again, employee name, may have social security number in here as well. Employment status, are they married, are they single? Tell you what tax table you're supposed to look at, and number of allowances. We have our earnings section. Our earnings section is our regular amount of earnings. Any overtime comes up with a total. We looked in personal finance. You may have things like commission and bonus that would add to your paycheck. We could have pre-tax deductions, things like 401ks, 403bs, flex medical, flex daycare, all of these things that are taken out of your earnings before your paycheck is taxed. For us, we're a little simple here in accounting too. We just got regular earnings, overtime earnings in total. We're not going to worry about those pre-tax deductions, but here is where they would show up. We have our federal income tax. Again, you're going to need either page 347, 348 in your textbook to look these numbers up. It's built off of your W-4 form, what your employee has told you should be taken out of their paycheck in federal income tax. State income tax is going to look the exact same way. Different table, but the exact same process. You have Social Security tax. This is 6.2% of your earnings up into that certain tax base. 132,000 was roughly our number in 2019. We also have Medicare. Again, Medicare is infinite. Whether I earn $10,000, $100,000, $100 million, 1.45% out of every dollar comes out in Medicare. Again, an advanced personal finance or a college level accounting, we'd maybe get into more detail, but we're talking way overly general ideas here. We could have other post-tax or after-tax deductions. Maybe you have to pay a chunk of your health insurance, depending on whether you're taking single or family health insurance. So that could come here in a health insurance column. You may have other columns that have post-tax deductions. Here we have some different, U.S. savings bond, United Way donations. That's in our other column. We could have other, post-tax deductions. Maybe alimony comes in. Maybe it would be, who knows what, but an after-tax deduction. We add up all of these deductions, right? The 38, the 60, the 14, the 45, and in this case, $10 in U.S. savings bond. We get to our $167.06 in deductions for Susan. She earned $968. We had to take out $167.06 in taxes. And again, every single one of these columns is going to be some kind of a liability. Federal income tax payable, Social Security tax payable, Medicare tax payable, blah, 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 payable. Payable, right side of the accounting equation, increases on the credit side of the T account. Then we have how much Susan's going to take home. Okay, $167 in taxes away from her $968 in earnings. She's going to take home a paycheck of a little over $800. Okay. Again, these are all of our employees for one pay period. I total and rule, make sure that my total earnings number adds up to my total deductions and my total net pay. these two numbers here add up to this same number here. When we get to Chapter 13, we will turn this into an actual cash payment journal entry. We jump forward in the textbook to page 353. It's something called an employee's earning record. This is a record dealing for one employee, but multiple pay periods, okay, a quarter's worth or 3 months worth. Most people are going to get paid twice a month. So if it was, say, quarter number one, January, February, March, that's a total of 6 paychecks. If I was paid every 2 weeks, that could be a 7th paycheck in there, depending on which months they pan out to be. But you're looking at, whether it be twice a month or every 2 weeks, you're looking at 6 to 7 entries in your employee's earning record, which again is one employee, but multiple pay periods. As we take a look, this is Rick Selby, and we essentially copy whatever happened in the payroll register, we pick it up, and then we drag it down to the latest payroll set information, highlighted here in white. Right? This is the December 15th payroll information. So Rick earned $10.56. He had $81 in overtime, earned $11.37. We take and drag down our federal income tax, social, Medicare, health insurance. He's got $10 going in United Way and U.S. Savings Bond. We got his total deductions, and then we have his net pay. We have one number left to finish up. We have something called accumulated earnings. Now, when we talked about the tax base, this is how we use it to calculate each paycheck. Back in January 1, accumulated earnings would be 0. As Rick earned money, and again, notice the term I'm using, earnings. If Rick earned $1,000, well, we would then say his total accumulated earnings would be $1,000. We then go to the second pay period, he owns or earns another $1,000. Well, his accumulated earnings, okay, earnings that have accumulated, would be $2,000. And we just keep plugging away month after month, adding the running total of our total earnings. It's not our net pay. If you try and add net pay, your math won't work, right? It is the total amount of earnings, and this helps us figure out, are they subject to Social Security tax? Remember, Social Security tax has a tax base of, the textbook says 87,000. It's about 132,000 in 2019, 137,000 in 2020. That's really what it's going to do. Now, it's more complicated than that when you actually go be a payroll accountant for what we need here. It helps us figure out, should we be pulling Social Security tax out of this person's paycheck? When this accumulated earnings gets ahead of that tax base, then we know we can stop taking Social Security taxes out. Doesn't matter for federal income tax, doesn't matter for Medicare, shouldn't matter for health insurance, other bonds, United Way, whatever that case is. Again, this is one employee for the accumulated earnings, multiple pay periods, versus a payroll register, which is all my employees, all my employees for one pay period.